What's up, guys? Will here for another trade recap. This is a ticker that I traded today. I actually bought some at the close yesterday. We'll break down into the details of how to play this WSRC, very volatile OTC. Had an 800% run up yesterday. And before we get into the breakdown, if you like the video, go ahead and like, share, comment. If you have any questions, go ahead and leave them in the comments below. We're going to break down how to trade this volatile stock. So I'm looking right now at a 5-year chart on this. It hasn't done really anything over its lifetime. We had a major run up in July of 18, all the way ending into the beginning of the year in 19 in January. And so what I'm looking at when I see anything I want to trade, I always go back and look at the long-term chart. The long-term chart is going to tell me where my overhead resistance is, if I have any. It's going to show me key points that I need to break through. So we see 8. 8 is key because you have 1, 2, 3 tops where 3 times it touches it and it comes back. And we see that 16 is the all-time high. So knowing what I know there, I'm going to go ahead and take it down to, okay, I got that going on. So here, remove chart shading so I can zoom. I'm going to just go ahead and zoom in the last 2 days. So yesterday, it opens up. This company posts some random news like they are Western Syria Resources Corporation enters talks to acquire a majority stake in a gold mining operation with enhanced recovery net income projected at $3.2 billion, right? This is bullshit. First of all, enters talks to acquire. That already tells me that I'm not believing anything that they're saying. But I'm gonna believe what the chart's telling me. So I see the run up. I missed the run up. People in my trading group, they were killing it, and I was just like, I was watching other stuff. OTCs have been dead lately, so I'm not really paying them a lot of attention. But now, they're starting to come back. So I'm gonna start looking for more runs like this. So we run up. Where does it stop at? Right. The first stop is 8. Remember, we go back on the 5-year chart. We see 8 as a significant number. Triple topped on 8. Back in 2018, it's resistance, right? What's our next significant level of resistance? 16. Okay. I did not trade this at all the entire way up. Matter of fact, when I was wanting to dip by it here because I saw it coming down, but I wanted it to come to 16. I like to trade on key support levels, key numbers from prior history of the chart. I don't want to trade this randomly. I see the major pull. People, made a few bucks on this dip. Not a bad, it wasn't a bad trade. I just, risk reward is not in my favor here. I'm not going to trade this. I don't want to trade randomly. I don't want to overtrade. I want to trade specific things. And so I'll watch it all day. The volume is significant. It's beautiful. And then it starts to pull. What did it bounce off of? 16. Then it comes back up. That's significant. Comes back up and then fades and then bounces off of mid 14s, low 14s. Excuse me. And so this is yesterday, and then look how it closed. It pulled, volume came back in, it started pulling back up, grinding up, consolidated, and then ramped into the close. Anytime something ramps into the close, I love it for a next day morning gap up. And OTCs, they don't trade extended hours, so as soon as the market opens, regular trading hours, OTCs can trade. As soon as it's closed, OTCs stop trading. So I bought this. When I saw it break the day high at 24 cents or 25 cents, I bought a small position because it was super speculative. So I just bought like 10,000 shares, nothing big, right? But my plan is to sell this 10,000 shares 30 to 35 cents. I want to see a massive gap up, at least to 30 cents. And so today the market opens, it goes to like 26, 27 cents maybe for like a second. I'm already getting out immediately. I'm not even looking to stay in this because it's going against my thesis. It's going against what I think is going to happen. If this thing does not gap up and continue this type of run to the next level, I'm not even staying in it because you're up 800%. You can't hold it and hope. You can't, well, let me give it another minute. No, you don't give OTCs another minute. You have a plan, you execute your plan, and your plan includes an exit strategy. You have to be disciplined enough to stick to it. So it falls down. I exit at 25, break even. I'm not mad. Now I'm like, okay, where is it going to bottom at? So the bottom today was at like 16.42 at the market open. So you have a 25 cent to 16 cent drop, right? When I saw the level two, or excuse me, when I saw the price action start turning, I started putting random buy orders in. Put a buy order in, 10,000 shares at 16, 10,000 shares at 16.5, 20,000 shares at 17. I'm just trying to get in it. I know not all of them are going to get executed, but I'll take what I can get. I ended up getting like 30,000 shares at like I think I had a 17 or right under 16 to 17 cent average, like 17 cent average, I believe it was. I can't remember specifically. And then starts bouncing. The bounce takes roughly 10 minutes, and you get a 16 cent to a 22 cent bounce. So I'm buying here, 17 cents, we'll call it. I'm selling at like 20, 21 cents. It might not seem like much, but that's a $600-700 gain right there. And so you don't want to catch the very bottom if you do great, and you don't need to catch the very top if you do great. You want to sell into strength. It's all about taking the meat of the move. And as a day trader, you're just looking for that 20 or 30%, movement so you can get in and get out. If I get 20% on this dip buy, I'm out. I love it. I'll take it all day, even if it doesn't matter what the number is. How much you buy doesn't matter. It's irrelevant. What matters is you recognize how to trade this. Massive run up, failed one day spiker, pulls back hard at the open because it can't gap and go, but you see the volume still there, so you wait for it to turn and you get in. You get the meat of the move. You buy a little bit and you sell it. You're not gonna make buku's money on this, but you're gonna make consistent money on this. $200 a day is my goal, and $200 a day, it might not seem like a lot, but that's $48,000 a year. And if you can do that consistently, it's not a bad side hustle. Okay, so now what does it do the rest of the day? That was my second trade. So the first trade was a swing trade. It failed, got out. Second trade was a dip buy. It was beautiful. It kind of fades. It drops back down to the day low yesterday. So this is support in my mind now because I already lost 16. So now I'm holding 14. Okay, I'm going to ride with it. So I'm not buying it here. I'm just watching it here. Get a little bounce. This is a nice little rip, from 14 to 18. It's not bad, but then you have one down here that goes up into the 20s, or right at 20, excuse me. And then it kind of just fades off the rest of the day, right? So I entered at the end of the day, and where did I enter at? I entered. It was like 14, right at 14, 13. This is exactly where I entered, right? This, matter of fact, you can kind of see the red candle. This is funny. Why did I enter here? Because I'm right at, support on the daily chart, just like today and yesterday's chart. And I'm risking this. I'm risking 1376, But realistically, if it doesn't turn and go up here, I'm going to cut out. So I bought in at 14.1413, I think. And then I bought 30,000 shares, and then I immediately turned around and sold it at 14 cents when it started pulling back because I was like, I don't know, I don't like it. And then I wanted to see it bounce off that support level and turn. So you got to be careful with OTCs. They're very, very risky. This was not a good trade. Realistically, this was just over trading. This was just me overthinking this trade. I should have never touched it, and I'm lucky I didn't get burned with this little fade right here because this little 14 cent. The 12 cent, when you have a 30,000 share position, that's a significant, it's like what, $600, $700, $800. I would have given back all the gains I made earlier in the day. It ended up closing, massively red on the day, didn't do anything. But in the press release, the company clearly states somewhere in here more news to follow. Pretty much like stay aware. So, is it in play? Absolutely. The volume faded today, but at the same time, and you already know how it's going to happen or how it's going to react to any press release that this company releases. And so this is a pump and dump. Like, I mean, it is what it is. This is going to go right back to where it came from, way down here. But at the same time, there's money to be made in these if you know how to trade them, right? You're not going to buy randomly on the run up. Like, you don't know when it's like somebody in my chat was like, "Hey, can we buy it at 12?" I'm like, I don't know. It's already up 400%. Like, it's kind of, but then it ripped to 25. So I'm like, what do I know? I mean, you don't know how high they're going to go. I've seen OTCs go to 3,000, 4,000, 5,000% in a day or two. And so there really is no way to predict how high it's going to go. But what you can predict is the dips. And so as of right now, this is a failed one-day spiker. I'm just waiting to see, how it reacts. So recent runners with tons of volume, with a catalyst, they're in play, they're in watch. As soon as you see any kind of news article come out on this, watch for volume and then watch and see what the chart does. And you already know, and the next PR will probably retest this 25-cent range, ideally, as long as it can hold up in this area and not completely fall apart. Because right now, if it falls apart anymore, you're just going to have a ton of people that don't know how to trade, who are over trading, who already lost money. They're going to be riding this thing down. And so you're going to have a bunch of bag holders, which is going to create a ton of selling pressure on any type of spike it has. So that's going to create a lot of overhead resistance. You want to, if it fades anymore, it's not even a question. I'm not going to touch it. So just an idea on how to trade a morning panic dip buy. Just to zoom in a little bit more so you guys can really see what I'm talking about. Okay. 1 minute chart. 25 cents. It opens up. It immediately starts to tank. I'm like, I already know if it doesn't gap up 3 or 4 cents, like I want it to close at 25 and I want it to open at like 28, 29. If it doesn't do that, I'm immediately getting out. Immediately. First green days, I mean, it was kind of hard for this one to gap because it was already up, 800%. But normally first green days that finish strong, a ramp into close that finish strong, they gap up the next day. You sell into the gap always. Easy 10, 20, 30%, you're out. Wait for the dip buy panic. So it dips. Didn't buy it yet. It dips. Didn't buy it yet. I wanted it to pull hard. And it pulled hard. It came back to almost where I wanted it to. So I started entering in here, like I said, and then I was out, like 5 minutes later, not even, at like 21 cents, 20 cents. I sold this. You could be a little bit more patient with it, but why? You just take the meat of the move. Anyway, guys, let me know what you think. If you have any questions, go ahead and post them. I will be sharing more videos like this in the near future. As I trade, I'm going to start breaking down all my trades, the good ones and the bad ones. I have a couple of overnight swings right now. I won't get into them here, but more to follow. So hope you guys enjoyed it.